Good evening, guys. Good evening. Here's your boy Umar Ikyo. So I'm about to do a top-down analysis for EURUSD. So before I do my top-down analysis, I make sure I go to the 1 month time frame in order to scale price from the monthly time frame. Before doing your analysis, you must know where the market is coming from and where the market is heading to. So here you see that on my left hand the market is currently bullish, and on my right hand the market is currently bearish, whereby we see on the left hand side higher highs, lower low, higher highs, highs and lows, and on the right hand you can see higher low, lower low, higher highs, higher low, lower low, higher high, higher low, lower low. So on my right hand here you see scenario whereby I have marked every break of structure pushing to the upside. Once price push to the upside, where we see we have base and drop, base drop, base drop, price break structure to the upside 1 2 3 4 times. They have the last break of structure. Since then price push to the upside, whereby you see I named here the all-time high. All-time high means the highest level whereby your USD has ever bought, or where dollar has ever bought on your USD, at the key level of 1.59,803. So since then you see that once price got to the all-time high Monday the 1st of September, it was a massive sell to the downside. Here I can consider it as a change of character. Price sold impulsively here to this level. So I mark that as a change of character. It is telling us that there are sellers who have interacted in the market. So when I push on my right hand side, you will see the market is completely bearish, whereby we see higher low, lower low, higher low, lower low, higher highs, lower low. So I will mark out my key levels. Here you have a break of structure. There's a break of structure, another break of structure. Here is another break of structure, whereby price sweep out liquidity, push to the upside. So I have marked out my key levels, identifying my turning points in the market. Means that turning points are area where price definitely spiked on and change its move. So here is my key levels being marked out carefully on the monthly time frame. So now I scale down to the 1 week time frame. Here am I on the 1 week time frame. You see the market is completely bearish for Euro USD. So I zoom out to this level. Here you have a high. At 1.19688. That is the high on the 1 week time frame, and we have a low on Monday October, which is 0.95, which is the next currently going to be the next drawn liquidity for USD, and the first key level I see here is 1.02168. So I will mark out that level also as my turning point. Market got to that level, spiked and pushed to the upside. So I scale down now to the 1 day time frame. When you scale to each time frame, it tells you that each candle you see there has taken that particular day or week to produce itself. Here you see every daily candle here has taken 1 day to produce itself. You see that on the daily time frame the market is bullish. On my left hand, market doing higher highs, highs and low, highs and low, highs and lows, higher highs. And when you push on my left hand side here, you will see market gave us this move. Market gave us this internal change of character. range of character, price push back inside the range here on the fair value gap, the 1 week fair value gap. Since then, price dropped to the downside, so I will mark out this key level here wherever price is currently there. Before the market closed on Friday, I think that was the next drawn liquidity whereby price had to take out before we see another move. So completely EURUSD is bearish. So when the market is bearish, you look for more sales opportunities. So here we are on a 4-hour time frame. Here we are on a 4-hour time frame. If you are about to take this move in order to get this sell opportunity, let me show you this. You had taken this break of structure here, another break of structure here, and you have this last break of structure. That's the last break of structure before the market push to the downside. Always mark out your key levels and wait for price action. Do not be in a haze. Once you analyze, wait for price action. Plot out your key levels and wait for price action. So if you are about to take this, you see that on this leg on the Tuesday March, where price had this second break of structure before the last break of structure to the downside, you see that there is a fair value gap there. So mark out this area on the 4-hour, or still go back to the 1-day time frame. When you go to the 1-day time frame, you see a fair value gap as well. So I spot out this level, which is Wednesday, the 4th of March. You see that price spiked directly into that fair value gap. That is my fair value gap there. You see that price spiked immediately. When you see a concept on the 1-day time frame, you go on the 1 hour to take your entries. So if you are about to take this sell on your USD, which is very massive, you take your entry from here, sniper entry, and you catch this long move, you are done for the week. You put your stop loss slightly above your fair value gap. Simple. So this is how you analyze your market. Clean, no stress. Plot out your key levels and wait for price action. So if you were about to catch this move before the market closed last week, you would have been in massive profit by now. So as I'm doing this top down analysis, I should be preparing for next week for the market to open on Monday. So when I scale down to the 4-hour time frame, I just want to mark out potential key levels where I expect a pullback and I continue with the trend, which is a bearish move. So you can be waiting for price at this level. Waiting for price at 1.151 and 114.4. So we just plot out those key levels there and wait for price action. So guys, thank you very much. Here's your boy Umaru Ikyo, and hope you stay tuned. If you're lost, you can ask questions. Always ask questions. So expect something like this for your USD. You know that when your USD is selling, the XY is buying. So here's your boy Umaru Ikyo. Thank you.